Hi, everybody. This is Gary Dean, and this is our nightly video report for Tuesday, November 29th, 2016. Kind of a nothing day today. We saw the Bulls give it a try, but towards the end, things just kind of leveled off, and that's typically what we start to see more at say a short-term top. And one thing that I explained yesterday was, this is a 15-minute chart, was that we could see the S&P come back and backtest this channel that I broke through. And you can see once we got up to these levels here, this is when, it was creeping higher but not busting through. And then really the last hour, we saw some selling. So where we turned here, it's, to me, after a move that we've seen after the Trump rally, is we should get a bare minimum of a 23% retracement, and that's also support right here. So I don't think the best really way that I would label this is your A, this is your B, and now we're going to come down and make a wave C. So I wouldn't be too bullish on this market, even though we closed up today. I think that it's going to need a little bit more of a pullback than what we saw, and like I said, a bare minimum would be a 23% retracement, which would be 2182, and we didn't even really get close to that. So there still should be some room down. But the thing is, after the the size of the move that we've seen, it would be even it would make more sense to see a pullback down to the 38 or even a 50% retracement. But I'm not sure it gets there right now. Let's just say the first target, it would be 2182. Obviously, the Bulls need to get it above this 2110. If they do that, then they got to get it above the 2113, and then we'd be looking at a move up to the 2117. Bears need to get it through, which is right now the last moving average for the 200, and that's going to be the 2198. So you can see it's price support as well as the moving average support. If they lose that, that's where I believe we have a quick move down to, say, the next step in the ladder, which would be the 2182. If they lose that, then we're probably coming down to the 2163. So if we take a look at the 60-minute chart here, I have some numbers on it because I did the webinar today, and anybody who signed up, I really do appreciate it. But anyway, it was an interesting chart that I put, and it was. This is on June 7th, 2016. So you can see a typical technical buy-sell would be once it breaks above this high right here, you would buy. And so right now I'm just using this as the starting point, and this is the breakout here. So you're talking about a move that came down, tested this support again, came up, tested it, and then broke through, and this would be the technical reason to sell. So if you got long all the way, back at this level here, you covered at the same exact spot, and then from there, once it's now what happens is your technical buy would really be a break above the 2155, or really even the 2180. So my point on this chart was that going all the way from June until November, you're pretty much break even each time, and there was no really clear advantage. So we obviously have the move up here. You have the bearish divergences. Again, I would not really trust the long side from here because there's just too many people looking up right now, and we haven't really had any type of real breather, and I believe we're going to. So you can see buyers stepped in at the moving average here. So if they lose this, that really that we should see that quick drop down to the 2182, and like I said, 2155 is the 200-day moving average, which is also right in between the 38 and the 50% retracement. So this actually makes sense to come down and test this level here, and if they hold it, then we'd probably get another move to the upside. But I don't like the long side because of the bearish divergences, and these moves, anybody who's piled on them, it's been a losing trade. So I'm not going to believe that this one is different. Maybe it is, but right now I'm not going to believe it. And I'm waiting for the pullback, and like I said, 21.55 makes sense. Daily, this is that bearish rising wedge that we back tested. So again, it could be a something that is setting up for a decent little short trade, because this happens a lot, and typically when that happens, it's a little bit of a blow off top. But I could see us come down and then like I said, back test this wedge again, and then from there it'll probably be your swing trade short. But for now, I would not be chasing the long side. Too many people are looking that way. We have too many reasons that are saying to expect a pullback. We haven't really had anything of any size yet, but I do believe that we should see a little bit more before they try higher. So with that, have a great night, and I'll talk to you guys tomorrow.